It's only the oil stocks that are really holding up the market, and that's obviously because some kind of a resolution is expected, some kind of relief from the meetings that are being held in Delhi today. It's extremely unlikely that petrol prices will be raised anytime soon. It would be morally difficult for the government to expect the Reserve Bank not to raise interest rates when they are raising petrol prices. That may keep the situation at bay. Also, the government has just put in a lot of food inflation control measures yesterday, something that should have been announced at least a quarter ago, at least 3-4 months ago, an attempt to reach a lot of grains from the stocks into the states, across the state governments as well, directly to the retailers. All that is expected to smother food inflation. Plus, we have seen a fairly sharp fall in wheat prices and edible oil prices globally. So looks like the January inflation number will anyway be softer, and the government would be well advised to wait for the January inflation numbers perhaps and then take any action on passing on the fuel price, even if it's only petrol, which doesn't have as big a weight on the WPI as perhaps LPG and diesel. All right, I think we've got Vipul back. Vipul is back with us, Anicha.
Oh, absolutely. So, Vipul, if you could first give us a summary of what the mood is like and what sort of companies are you profiling?
See, basically, just wanted to clarify that this is not a power conference though, but we have released a sector presentation on the power sector in India, and broadly what we understand that the macro for the sector is pretty strong, with government committing serious money, and at the same time private sector also taking up a major role in terms of execution of power projects in the next 5-year plan. So if you look at government is committing close to 9% of GDP to overall infrastructure sector by 2014, and power is going to constitute about a lion's share of that, a bit close to 32% of that outlay will be towards power. Secondly, if we look at once again from the macro perspective, that India is going to remain peak power deficit in double-digit percentage points for next 3 to 5 years, and that itself opens up a major opportunity for power opportunities in India. And we think that large corporates, neo players lining up capacities in a pretty big way over next 5 to 7 years. So net we think that sector overall, including the sub-segments of equipment suppliers and balance of plant companies, they are going to see buoyant times for next 3 to 5 years in terms of their order books. Execution also is going to pick up pretty fast. So net once again to reiterate the view that macro very strong, execution is falling in place. The issues which were around the land acquisition, fuel supplies, are in so many cases are being addressed in a pretty aggressive manner.
Vipul, let's speak something about stocks in particular. There are two problems which appear to be dogging some of the power companies, listed power stocks now. One, that they are already seriously overvalued. One, because they have stretched their valuations to the limit when they did their IPO. The other consideration that has gone against power generation companies is that merchant power tariffs appear to be falling, and they have fallen even below their pre-monsoon levels, like below their summer levels. Is this a matter of concern? In the light of both these, are you wary of some of the power generation companies? What are your picks in that space?
Yeah, that's a good question though. What we would believe is that in the short term you might find valuation looking stretched, and the separation of men's within boys would happen primarily once again on the basis of two factors. The companies which have a control over the fuel supply. So this is going to be the key factor. So if you want to pick up winners within this entire utilities game, you need to focus on companies which have their fuel supplies tied up, or they have control over the resources in terms of mines, captive mines within their control. And second, the land acquisition which has been creating delays as far as execution is concerned. So if I have to pick up a portfolio of utilities, I think I'll focus on these two factors, and companies that have addressed these factors will be long-term winners.
You wouldn't be able to give us specific stock picks?
In our opinion, Tata Power stands out in that sense, because I think that the company will be net long coal in excess of 20 million tons per annum starting somewhere between 2014 onwards. largely because of their tie-up with the Indonesian company Bumi Resources. And second company which once again which meets larger part of these criteria would be Adani Power. So in our opinion, these are the two companies worth looking from a long-term point of view.
Vipul, one final question. In the power space, would power generation companies really be your favorites, or would there be some power equipment or power-related companies that you would pick?
Yeah, I think if you have to speak from the equipment side, the companies like BHEL is the one that we are recommending to our investors because it is spread across the entire life cycle of equipments and has good amount of visibility as far as orders for next 3 to 4 years is concerned. If we go down the spaces like the balance of plant companies, the company called BGR Energy is something which is very aggressive in terms of bidding for these projects and a fairly decent size of order book for execution. That also gives them a great amount of visibility. If you go to transmission line and T&D space particularly, the transmission line tower companies including KEC and Kalpataru are the ones which we think will be a long-term winners.
Right, Vipul. Thanks a lot for joining us with that perspective. Of course, we'll address a lot more individual stocks and what Religare is bullish on in the entire power space. We'll touch upon those stocks with Kunal Sheth, who's the power analyst at Religare, but that's after a very short break. Stay tuned. Welcome back. You're watching Markets Midday on CNBC TV18. We will touch base with Sanjeev Goenka of CESC in a bit, keeping a focus with the power space. But before that, let's continue with some talk power picks before we touch base with Sanjeev Goenka. Kunal Sheth is the power analyst at Religare Capital. Now, we got some broad perspective earlier in terms of what the power sector is looking at. But Kunal, want to touch upon specific stocks because I believe you like a lot of stocks in this transmission, EPC and T&D space really, KEC International, Jyoti Structures and Kalpataru Powers. What's your top pick from these three? What's the investment prognosis and what are your targets on these stocks?
Yes, you're right. We clearly like the power transmission EPC space because we clearly believe that the T&D spending over the next 3-4 years is likely to pick up significantly because Power Grid is expected to spend close to 550 billion in the current 5-year plan. Out of that, we have seen it spending only 40% of that amount. So the spending by Power Grid is likely to pick up significantly over the next 2 to 3 years. And we believe the biggest beneficiary of this spending could be this transmission EPC space. And we already seen, these companies have a strong order book of anywhere between 1.5 to 2 times their FY9 sales. And we believe that order accretion could grow at a faster pace and therefore the book-to-bill ratio for these companies could improve significantly. Within the space, we clearly like KEC International because of its strong presence in domestic as well as international space. Because in the domestic space, it has been able to garner strong order inflows over the 9 months. So it has shown its strength in the domestic market as well as in when the international markets pick up. We think that it will be a big, significant beneficiary of the same. Apart from this, the company is also looking at various other opportunities like the telecom space, looking at the BSNL order in that space, and also railway opportunity, which could be a huge opportunity for the company, and company could get into a strong growth trajectory once all these areas it is able to fruitfully capitalize. So we believe that is one stock that could be looked at and easily outperform in terms of stock performance.
Okay. What would be your price targets in terms of Adani Power, R Power and Tata Power? Which would be your best pick in these three?
As we mentioned that within the utility space, clearly we like companies who have a strong hold in terms of their fuel supply in place, because we believe that could be the make or break situation for the companies going ahead. Clearly, companies with good execution skills and strong balance sheets will stand out. So within that space, as we mentioned, we like Tata Power with a price target of 1550, and so that would be our topic within that space.
All right. Thank you very much for joining us, Kunal. Have a good call.